Welcome everyone to Vested Interests. This is Shane, and in this video we've got a lot to cover. It's been a crazy couple of weeks, actually crazy few months to start 2022. Market is very volatile, ups and downs, a lot of pullbacks, a lot of value in the market. So what I've done is in this particular video we're going to cover what we added for the week. We added $5,850 around about. And then we actually reallocated about $5,942. And basically what that means is we sold out of a few positions entirely. We moved those funds over to other positions that we think may be doing better in the future. A lot of people might call it rebalancing the portfolio, reallocation, whatever you want to, whatever term you want to use. That's what we did this week. So that is what we were going to cover in this video. Guys, if you like content like this channel is dedicated to dividend investing, dividend growth investing, dividend stocks, my portfolio reviews. I've been doing a series lately with all the pullbacks, stock of the week. I'll continue that as long as there are stocks to cover that I feel are significantly below value that have pulled back. There's a lot of them right now. Initially, I'll focus on the ones in my portfolio. But if I see some outside the portfolio that present significant value as well, I will bring you those. So if you like that kind of content, guys, consider subscribing to the channel. Hit that notification bell so you're notified whenever we do put out additional videos. And hit that like or thumbs up button if you find value at any time in this video. And guys, with that said, let's get right to it. So, started out activity on March the 7th. We put $1,795.29 in capital to work. With those funds, we picked up Prudential Financial, ticker PRU, 8 shares at $104.35. And just like it says there, Prudential is in the financial sector. We picked up 8 shares of LyondellBasell Industries, ticker LYB, at $97.03. Picked up 7 more shares. We've got a significant position in Lumen Technologies at this point, about over 127. I think it's 127 actually right on the dot shares, plus some fractional shares as well. And Lumen Technologies, ticker LUMN, for 1062, and this is in the communications sector. LyondellBasell Industries is actually in the materials sector. And picked up 2 shares of Verizon Communication, ticker VZ, at $54.95, and they are also in the communication sector. That was March the 2nd. On March the 8th, as we spoke about in the beginning of the video, we did sell out of several positions. This is just the first couple. We sold out completely out of Gladstone Commercial Corp, ticker GOOD, 39 shares at $21.22. We picked up $827.67. Good is actually one that I really like. It's a REIT. It's a monthly paying REIT, but you'll see here in a moment, whenever we look at where we reallocated the funds, there are just some other opportunities I feel that are better opportunities at this time with the pullbacks in the market. I think I actually was down a little bit, about 1 or 2% on Gladstone Commercial, so there was a little bit of a loss here, which will be fine for tax harvesting purposes later next tax season. And then we sold out of GlaxoSmithKline, ticker GSK. This is in the healthcare sector, 12 shares. This is one really I hadn't been adding to at all. It had just been sitting there. We were actually up, I think 3 or 4% on this, but again, not a whole lot of capital gains. Basically just the dividend return and a little bit of capital gains. Like I said, 3 or 4%. So between the two of them, it was about a wash, really. I think I was up a little bit overall, but we sold out completely out of GlaxoSmithKline and Gladstone. And then with the proceeds, we picked up. So as you can see, we reallocated that $1,309 we made from the 2 sales. We added $2,236.42 to that. And with those funds, we picked up Cisco Systems, ticker CSCO, 20 shares at $54.39. And Cisco Systems is in the information technology sector. We picked up 8 more shares of Verizon Communications, ticker VZ, at $53.70. So this is about $1 cheaper per share than what we paid on the 7th. So again, as these pull back, we like to add to them. And Verizon, I built this position out significantly as well. So we're up to 100 shares of Verizon. And that is part of the goal, guys. I want to get all these holdings. That's why I'm reallocating some funds. I want to get some of these holdings significantly up so that the dividends start paying for additional shares in these companies. So the next time I get shares of Verizon, it will actually pay me a full share or two of the company. That's the idea here. We added 8 more shares of LyondellBasell Industries, ticker LYB. LyondellBasell Industries, $96.77. We added 10 shares of Cisco Corporation, ticker SYY, at $76.59. This actually fell down significantly on the day, but we actually sold out of this position as well entirely, and I'll speak to that here in a little bit as to why. And very rarely will I pick up shares and then sell out of a position within the same week, but that did happen this week, so we're going to cover it. And we picked, and Cisco Corporation is out of the consumer staple sector. Leggett & Platt, ticker LEG, we picked up 10 more shares there. This one's down significantly, guys. This is a consumer discretionary, in the consumer discretionary sector. That is a sector that you might look at for some pullbacks right now. I think Leggett & Platt is down 13 to 15%. A dividend aristocrat, if not a dividend king. I've been paying dividends for over 25 years. So I believe their real pullback is because of the market conditions, the economic conditions we're in. Nothing about the business I can see that is in danger or in danger of cutting the dividends. So this is another one I'm building up. I think I'm at 100 shares currently in Leggett & Platt at $37.04. Bank of America, ticker BAC, picked up 3 shares there at $39.18. Well below, I think I'm sitting right at about $41 per share cost basis. I'm trying to build out Bank of America as well to 100 shares. I think currently I'm sitting at right around 60, 61 shares right in there. So with the reallocated funds and the funds we added to it, guys, this is what we picked up on March the 8th. On March the 10th, we sold out of a few more positions. Another REIT, National Retail Properties, NNN, 28 shares at $42.99, picking up $1,203.56. It did cost us a couple pennies to make that trade. We sold out of Main Street Capital, ticker MAIN, and NNN is a REIT, if I didn't mention it. Main Street Capital is in the financial sector, ticker MAIN. We sold out 30 shares at $40.84, picking up $1,225.19. And as I said earlier, we sold out of Cisco Corp, ticker SYY, totally 28 shares at $78.74. So if you saw there, it had pulled back, I think, to 74 or 75, and then shot up by about 5 to 6% to 78.74. So one, I wanted to capitalize on the 5% gain, and two, Cisco was one I added to last year, and I hadn't really gone back and looked at it, which this reminds me, guys, if you add to your portfolio, you need to every now and again check on them and make sure that they are still meeting what you really invested in them from the beginning, right? There was a reason that I picked up Cisco Corporation. I thought it was undervalued at the time, plus their dividend looked extremely safe. But I did look, and in the last quarters, they have their free cash flow has dropped significantly, and they're actually over 100% payout on their dividends, which to me says that they may be in danger of cutting the dividend, which is why I was comfortable getting out of the position altogether. And like I said, it was up about 5%. National Retail Properties was down about 2%, and Main Street was pretty flat. So overall, again, it was pretty much a wash. I think it was up a little bit on this, but we did pick up $4,633, and we reallocated those funds on March the 8th. And as you can see, a significant amount of activity here on March the 8th. The $4,633 that we picked up from those 3 sales, we added $1,841.02 in additional capital, and we picked up 6 more shares of 3M Company, ticker MMM, in the industrial sector at $144.46. 3M is one that is pulled back significantly. I would love to get this to 100 shares. I think I'm currently around 38 shares. So we will continue to add this so long as it stays in the 140 or below area. I think my cost basis is in the 160s, so it's significantly lower than my cost basis. And I would love to, like I said, get it to 100 shares right in this $140 range. We picked up 5 more shares of O Realty. This is a REIT, a monthly paying REIT, ticker O, at $64.53. Another one that's pulled back. I think I'm at $67 per share. So this is another one I'll be adding to. Love to get it to 100 shares or more. Huntington Bank shares, ticker HBAN. 2 shares there, $14.60. Huntington Bank shares, we're over 100 shares now. This is in the financial sector. It's a regional bank here around Michigan, Ohio, Illinois, I believe. Definitely Michigan and Ohio. I live in Michigan, so I see them all over, and I worked in Ohio this past summer, not in 2021. So I know they're down there as well, but I believe they're in Illinois also. And we picked up 10 shares of Coca-Cola Company, ticker KO. One I hadn't added to recently. It had pulled back a little bit, but it has run up to about 10% gains, so I was avoiding adding to it, but it pulled back a little bit, so we're adding there as well. Kraft Heinz and Coca-Cola KO is a consumer staple. Kraft Heinz also a consumer staple. We added 16 shares, ticker KHC at $37.62. Another one that had run up but has recently had some pullbacks, so I may add a significant amount to this. I'm in over 100 shares now of KHC. AT&T, ticker T, 11 more shares at $23.07. This may be a little one that people like or they hate type of stock, but there's going to be a spinoff here shortly, so I definitely want to get involved in that and pick up the shares post spinoff. And it's also $23. I was in it at like 24 something, so it's down below my cost basis. And I think I'm at 110 or 112 shares, something like that, of AT&T. This one I wouldn't mind adding another 100 shares or so too, if I could do that before the spinoff, if it stays low, continues to dip. 1 share of Stag Industrial, ticker STAG. This is a monthly paying REIT, $39.21. We picked up 16 more shares of Verizon Communications, ticker VZ, in the communications sector. Again, 53.27 was another pullback. And we did run this up over to 100 shares, so I'm happy with the position I'm in there. Johnson & Johnson, ticker JNJ, out of the healthcare sector. They are also doing a spinoff, so I'm trying to load up on this before the spinoff. Plus, they're under $168.68 I picked up the 8 shares for. So I'm trying to fill out this position as well. So that's part of the reallocation, guys. I want to fill out some of these more core positions: Johnson & Johnson, Verizon, obviously, Stag, AT&T, Kraft Heinz, Coca-Cola, Huntington Bank shares, Realty Income, 3M. I just feel these are better companies and are providing better opportunities right now than the ones I sold out of. Bank of America, you see here again, ticker BAC. We added 13 more shares at $40.79. Intel Corporation, I am up over 100 shares here as well. 10 more shares, ticker INTC. This is a information technology or technology sector as well. $46.47. Anything under 50 to me is a steal for INTC. And 16 more shares of Leggett & Platt. So you're starting to see, guys, why we did that, right? We picked up on multiple days Leggett & Platt, multiple days Bank of America, Verizon, Stag. So we're filling out these positions. That's the idea behind this reallocation. And Leggett & Platt, like I said, is consumer discretionary, and we picked it up for $36.23. Quick portfolio update, guys. The total value is up to $99,070.11. So we are real close to crossing that 6-figure threshold. That will be a hell of a milestone. I'm very excited to be able to say I have a $100,000 dividend growth portfolio in the 6-figure amount, and we will continue to add, and hopefully these pullbacks continue. I know that's funny to say. Most people freak out when the market's pulling back, but to be honest with you, it increases my yield, which you'll see here is 4.383. So pretty close to what it was before we made the sales. So it didn't really hurt the yield reallocating those funds. And the biggest annual dividend income, this is what we're all about, guys, whether the market's up, down, sideways, or just running flat. The dividend income keeps rolling in, and we are up to $4,342.67 with those additional funds we added this week, plus rebalancing the portfolio. I mean, it shot us up by almost $200 in annual dividend income. So really, really happy to see that. And like I said, guys, if you like this kind of content, drop a like down below. Let me know what you're doing with your portfolios. Really interested to hear what everyone's doing. I know there's significant amount of pullbacks in different areas, stocks that I'm holding and stocks that I'm not holding. Many of the stocks on my watch list are starting to get fairly valued and even are in that pullback range. And if I wasn't focused on filling out my position currently, I would be adding a couple more positions. Whirlpool is one that I really think is attractive. Cummings is another one I think is really attractive. If you wanted to take a little bit of a gamble, Foot Locker might be one to look at, but they may have some significant issues if Nike is not going to be part of their future over the next year. So those are some areas I see. I know Starbucks is one people like right now. Personally, I think that has some room to drop, so I'm waiting for it to hit the high 60s or low 70s, and then I might jump in there. But those are some I'm keeping an eye on. Communication sector, I'm at 9.59%. Consumer discretionary, like I said, this is one I'd like to add. Whirlpool is one that I may add here after I build out some other positions at 3.67. Consumer staples at 9.65. As you saw, I am adding to this position here, this sector here. Energy is at 11.4. Financials at 8.2. This is another one I want to add to. With rates going up, guys, financials may take a dip initially, but then they will benefit with higher rates, right? Loan rates are going to go up, so they'll have higher yields and be bringing in more funds based on those loan payoffs. Healthcare is at 12.02 cents. We are 12.02%. We have an aging population, guys. This is one you might want to look at if you're not in this sector, don't have anything in this sector. I like Pfizer, I like Bristol Myers Squibb, Johnson & Johnson. Industrial sector is at 12.19. Technology at 10.59. As you saw, building out Cisco and Intel. This is one that I'm trying to build out as well. The NASDAQ has really pulled back. So this is a sector where there's probably going to be some value for a little bit of time until the NASDAQ bottoms out, which I don't think we're there yet, and then starts to rebound, which sometimes, especially if we enter a recession, it may take decades or years. Materials at 7.28. Utilities at 5.37, and REITs and real estate at 10.04. This is another one that's pulled back recently with the pullbacks in O Realty, with pullbacks in Stag, pullbacks in Store. Several of the REITs that I'm trying to build out, got out of a couple REITs to build out those positions, so reallocating some funds there. This is one, as they pull back, I want to add to as well. With that, guys, that's the end of the video. I really appreciate everyone stopping by. I hope you're doing well. Like I said, let me know what's going on with your portfolios. Really interested. Drop a comment. Let me know what you think about the video. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial securities come to those who take a vested interest. Hey, we'll see you in the next one, guys. Thanks for stopping by. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.